Hello, everyone. Welcome back to the Daily Gold YouTube channel. Thank you so much for joining me on this Friday afternoon, April 4th, 2025. And what can we say? It was really ugly out there for gold and silver, especially today, Friday. Up until today, gold and the gold stocks, they held up very well Thursday and before, but wow. And silver was hit, of course, before that. But after today, really rough week. Gold down only 1.5% on the week. Silver down, I think, potentially 13% on the week. The silver juniors were down by about the same amount. GDX down 8.5%. GDXJ down almost 10% on the week. So really ugly week as the stock market is in the middle of a crash here. Precious metals really finally hit aggressively today. So where are we? Where are we going? What are the charts telling us? We'll try and get into that in this video. Let's get to the charts. And here's the market overview for the week for you. I was looking for a picture of a man vomiting, but I couldn't find a good one. So I just scrapped that idea. And so here we can see the day by day. I apologize for not doing custom charts here where I could have put in my own 200-day moving averages because GDX and GDXJ, these are still above their 200-day moving averages. Whereas the S&P today, this is below its 400-day moving average. So the S&P has fallen below significant support levels. Down here below 5,100. This has to go to somewhere in the 4,700s to test its 40-month moving average. Now, why is that significant? That is my secular bull bear indicator. When a secular bull market is ongoing for many years, as this one has been, and then it loses the 40-month moving average convincingly, that is it for the secular bull. So I'm not saying this is imminent, that it's going to lose that 40-month moving average, but over the next 3, 6, 9 months, this is something to watch for because I think at least maybe in the next 9 or 10 months, it could lose that moving average because that confirmation signal, if you go back to the secular tops in 1929, 1968, and then 2000 for the stock market, the secular confirmation signal of a new secular bear was when it lost the 40-month moving average. That happened roughly 12 months after it peaked. So doesn't mean it's going to happen exactly 12 months after it peaks or after it peaked in February. It could be a lot sooner, but talking a little bit too much about the stock market, but that's where we are for that. Gap signal emotional selling. So maybe in the next couple of days, we can start to put in a short-term bottom. As we can see here, really ugly day. The silver juniors down 10% today. They were even getting hit before this. Silver, quite the same picture. Gold is finally getting hit. GDX, really, it's hard to think. GDX was right here before today. GDXJ right here before today. So they had held up really well before today, but this is the damage today. So that's ugly. So that's where we are. Getting into the other charts. This is a big development. The gold to silver ratio finally breaking out to the upside here. Remember all these videos I did talking about, it might break above 90, it has support here. Maybe it's going to break down. Maybe it's going to break out. Oh no, that's a fake. Forget it all. It's broken out now. It's at 102. Now, why is this significant? Let's look at a little history. What happens after this breaks out in favor of gold? Well, let's go back and look here. What happened here? This is a breakout in the ratio here in 2018. Well, you had a couple months after that, you had a low here in the price of silver. What about here? Global financial crisis. So this ratio breaks out in late 2008, surges higher, but what happens after the breakout? Silver bottoms a couple months after. Here's another example here, early 2000s. Breakout here, think 2001-ish, and silver bottomed a little bit after that. So, and here's a chart of silver right now. We'll get into that, but long story short, what does this tell us? This is probably, you have 90, 70 here, so that's 20 points. So you have a measured upside target of around 110. So silver will probably sell off, weaken some more. But given this recent history, and you also have this in the 70s, but the 70s were kind of different because remember, the gold price was fixed until 1971. Silver freely traded, went higher in the 60s. So, the relationship between the two, it's a little skewed in the 70s. And I don't want to completely ignore that. But based on all this history, I think it's a good it's a good notion or idea that this could pan out again. This moves up to 110 and silver gets hit some more. But in a couple months, silver could put in another really significant low. And by significant, it's a significant low where it really moves and accelerates to the upside after that low. So that's the gold silver ratio. Another big picture thing, I was talking about this in the last few weeks. What happens after gold makes a breakout, moves higher, but then retests its 200-day moving average? Well, one thing that happens after that is almost immediately after it tests a 200-day, it starts outperforming, or silver starts outperforming gold. Or it can take anywhere, in the other examples where it did not immediately after the test, gold retested the 200-day, then 2 to 3 months after that, silver started outperforming. So here's the gold chart here. Okay, so it doesn't include, I don't know why this doesn't include the last 2 days of price action. But after today, I think no one would argue that gold can test its 200-day in the next few months. So you have this big breakout here, big move up, it tests a 200-day. Let's look at history and see what happens. Okay, big breakout here in the early 70s, test the 200-day. That's exactly when silver started outperforming. Here's another example. This breakout in 1978, the nasty cyclical bear rallies up here, breaks above 200, then it does a 20% pullback to the 200-day. And then after that, silver starts outperforming. By the way, after these tests, it's not just silver that does really well. It's gold too. I mean, the whole complex. Again, breakout here, big move higher, comes back and retests the 200. Look at the move after that. I mean, that's a huge move after that test. Same thing here. I mean, you had the blow off. Here are some other examples. This breakout, I believe in 2003. So breakout for gold. Then it does a sharp retest at the 200-day moving average. And what happens? Silver starts outperforming gold after that. Same thing here after, or in the middle of the global financial crisis, late 2008, or I should say late Q3 2009, breakout move, not the best breakout move, but then it comes back, nearly tests the 200-day, moves a little higher, and then after that, silver begins outperforming gold. Another example here, silver didn't begin outperforming gold right away, but you get the point, people. I know everybody's frustrated, and this is a real nasty sell-off the last few days. And even good juniors, especially good silver juniors, are getting crushed. But people, you have to understand this. Look at what happens when after gold makes a breakout move. Breakout moves higher, then it comes back, retests the 200-day, and then you're really, really close to silver beginning to outperform gold, and the whole sector exploding higher. So I'm not saying the next couple of weeks things are going to V-bottom and shoot to the sky, but give it a little time. This next low is going to be a really, really important low for the sector. So we have to keep that big picture in mind. But of course, I'm going to talk about the very short term in this video. So let me get to the other charts. Okay, so this is a good transition. So here's the 200-day for gold. Here's the 150-day. Let's keep our eyes on the 200-day. I'm just projecting here. So this could come back here and come close to, it looks like this will hit 2,800 before the summer, or at least get very, very close. Gold's already down to 30.39. So again, this is the 200-day. Based on what I said in the last slide, this will probably get retested at some point in the next couple months. Then you have this support level here, just below 2,800. So this is a confluence of support I'm looking at here for gold as far as the daily chart. Silver chart, I mean, damn, this is ugly. So it's broken below the 200-day. I'm going to talk a lot about this moving average. This is the 400-day, 80-week, also the 20-month. So really significant moving average, just below 28. So I think silver will at least probably make a decent bounce here from this moving average. Here's the gold-silver ratio. I already talked about it. You can see the breakout in the last couple days. All right, let's look at the weekly chart. So here's gold. We can see here, nasty candle. Yes, that probably marks an interim peak. I talked about these types of candles a couple weeks ago. Initial weekly support here, just below 2,900. But again, this is the equivalent to the 200-day. This is coming up here just below 2,700. So this is that level. So yes, this confluence, you'll see, or maybe it'll go like that. And of course, gold will come back to, so anyway, I know I'm rambling on, but my point here is this is probably the support level to look at, just above 2,700. Now, the silver weekly, yeah, this is a really ugly candle. This is that 400-day or the 20-month, 80-week moving average. So again, this is coming up here right below 28. And looking at the weekly line chart, this is where line charts are really helpful because we can smooth out all this volatility and we can look at, okay, based on closing weekly prices, what are the key levels? We can see here, basically, this is the mid to upper 27s and 28. So we can see this is significant support right here. And this intersects with this moving average just below 28. So that's going to be really good support here in the short term. Okay, let's talk about the monthly chart for silver. This is just the monthly line chart. I've talked about it in past videos. This is 35.60, 35 here, 35 here. Silver closed just below 35, but you get the picture. This is a real significant level. It's also significant quarterly resistance, but significant monthly resistance. So for me, guys, remember gold at 2,100 and it took multiple attempts to break above that? That's $35 for silver. So it's going to be the same thing. I'm not saying it's going to consolidate for 4 years, but it's going to have to consolidate for a little while. So again, $2,100 for gold, silver, $35. They're very, very similar. Now, looking at the support levels. So this is monthly. So monthly closing support, 27.50. Maybe we could have moved this up a little bit. Maybe that would be 28. And this is a moving average. This is a 20-month moving average. We showed it in the last slide. So this is coming up here right below 28. And typically, when you are in a cyclical bull for silver, that tends to be the support. I mean, here's some examples. I could have mentioned it here. This one, I could have marked it. This test here before it went parabolic, but let's go to the 2000s. We can see here, intra-month, it might have got down here. So here's another one. It went a little below. This pullback here before it really exploded actually came pretty close intra-month to this moving average. So, and go back here to 2023 and early 2024, you can see it held above the 20-month. So this is coming up, and I don't mean to belabor the point, but it's probably going to test and close at this moving average, which we rounded up a little bit. That's 28. So you get the picture. 28, really significant support for silver on a weekly and a monthly basis. Not a whole lot to talk about in the stocks. I want to do more work on that. But, if you're into the stocks, we cover the stocks at the Daily Gold Premium. We invest in the stocks and follow the stocks that we think are quality companies that can 5x or 10x over the next 2 or 3 years in this, what to come will be a spectacular move in gold and silver. So that's what I'm trying to do. And I think that's the key, people. Look at the company itself, evaluate the company. If you're just thinking about gold and silver prices first, second, and third, and then you spend less time on the company, you're not going to do as well. We've seen that in the last few years. It's all about company analysis and stock selection. That is the key to making lots of money in this bull market and then keeping it. So if you're interested in that, go to thedailygold.com/premium. If you're already a subscriber, and those of you who have signed up, I appreciate you and your business. Thank you so much. Looking forward to working for you and helping you make money over the next few years. Now, let's wrap it up with the stocks. I mean, we had a stock market crash, people, and I know some stocks and silver stocks, SILJ here, are getting hit hard. But, let's look at the gold stocks, GDX, GDXJ. They're not even at their 200-day moving average yet. So I know it's a painful day, but look where these were even a couple days ago or a couple weeks ago. And I'm not scratching my own back here, but premium subscribers will tell you I did put out a flash update Wednesday early morning, and I mentioned a correction in gold could be imminent. So, and I mean, I mentioned it in the last video and the video before that we were due for a correction. Was I calling a crash, or did I think silver stocks would go down and silver would get hit that hard? No. But I'm just pointing out that we expected this weakness, but not necessarily these nasty bars and candles. So all that babbling aside, this is the key here, the 200-day moving average. We can see here lateral support. I would mark this 38 to 40. 200-day here is coming up. 200-day moving average here for GDXJ. Lateral support. This is good lateral support at 47.5. Maybe there's also lateral support here, 48, 49. But 200-day moving average is a good target for GDX and GDXJ. SILJ, yeah, there is some price damage here. So in the short term, silver stocks, silver juniors will probably struggle. That's it for the video. I mean, this ran a little bit long. No, it was a rough last couple days. But that being said, big picture is still really, really bullish for precious metals. And they were due for an interim peak and a correction. And they're going to correct for at least a couple months here, maybe longer. But I don't think not that much longer. Okay, enough of me babbling. Hope you guys had a good week aside from the shitty market. Hope you have an even better weekend. Leave a comment. Let me know what you think. And I'll talk to you guys again next week.